Welcome for this forum where we discuss about innovations in insurance industry. It's a great time, it's an opportune time. Insurance in Africa, the opportunity in front of them. It simply cannot be missed. The sector has untapped value worth estimated US dollars 68 billion, according to McKinsey 2020 research. It is a market that is expected to grow at 7% per annum for the next 5 years, making it the second fastest growing region in the world, with both life and non-life products achieving ever greater levels of demand. Clearly, a massive untapped market presents itself, and digital and data platforms will be the key drivers behind all penetration strategies. Kenya is trying to move from a low level of penetration of 2.34% to higher levels of penetration, about 5% in the next 3 years. So for them to move to these levels of penetration, insurance companies need to leverage data. Research has shown that there is organic growth achieved by companies that are leveraging data doing better at 24% as compared to the laggards at 15%. So data monetization is very important for organizations to successfully achieve digital transformation. The benefits for data and digital platform are clear. Number one, insurance companies must get and adopt a platform approach that enables engaging omnichannel journeys through end-to-end digital operations and centralized data. So number one is omnichannel, very important, and ensuring customer journeys. Number two, the ability to reuse mobile across products. The ability to use modules and channels and processes which will reduce total cost of ownership. That means that the insurance companies become more effective and efficient. And then thirdly, market to be accelerated using enablers in insurance to conceptualize and launch products more rapidly. The time to market in insurance industry is very important. Insurance industry and companies have been hampered by the time it takes to research on a product, market the product, and get it to the market. By the time it gets to the market, sometimes it's already outdated product and service. So time to market is a critical success factor. What are the 5 levers that insurance companies must embrace for them to be competitive, to be sustainable, and to grow? Number one is customer self-service. Customers want to serve themselves at midnight. They don't have to wait till they go to a brick and mortar branch. They want to serve themselves in the morning, anytime they need the service. That's number one, customer self-service. Number two, third-party service providers in the value chain. The value chain is huge, from the time of underwriting to the time of claims being settled. Third parties need to be involved in this process so that we reduce friction as much as possible, and the customer becomes happy customer who returns the next year. So persistence is improved. Then agents need to be enabled as much as possible to have digital tools that help them serve customers coming up with underwriting policies and the claims being settled on time. So agents need to be enabled to be more efficient and to reduce the expenses. Brokers also need to be enabled as much as possible because they work to help the insurance companies deliver that product to the end customer. Brokers are a very important part of the chain, the value chain, and they need to be given the tools that are platforms that can help them with enabling digital journeys that make easy and efficient to business processes. and closing policies. Then finally, number 5 is to embed insurance in the ecosystem. Think about companies that are giving tickets for flight. They can embed insurance in those tickets for flight. Think about hospitals that are giving mortgages, or banks that are giving mortgages. They can embed insurance in those products. So working across the ecosystem will make the insurance companies be more resonant with the customers and more relevant and more sustainable. Let me give a good example of some companies that have leveraged artificial intelligence to drive more customer engagement, to drive profitability, to drive sustainability. Number 1 is Cape Analytics. Cape Analytics has been able to assess claims remotely, underwrite and price accurately by leveraging artificial intelligence. What have they done? They have been able to do valuable property attributes combined with a simple API allowing investors and insurance to better select properties, evaluate risk, and streamline underwriting processes. So Cape Analytics is a good example of what insurance companies here in Kenya can leverage. Number 2 is Insurify. It's been using AI in insurance with the help of smart and always on call virtual agents named Evia. Facebook Messenger. Insurify instantly verifies customer data to compare real-time quotes from carriers in various zip codes and provide coverage recommendations. Its engine quickly finds the best insurance for each user based on that user's profile. That is high level of personalization and agility and convenience. Another example is CCC. CCC is using AI in insurance, provides an AI solution for vehicle collision estimates. Okay, just imagine that. Called CCC Smart Estimate. It blends estimating logic and AI photo analytics to come up with suggestions for estimations to help them make better claim estimates more quickly and more accurately. Just imagine avoiding collisions. That's a great innovation right there with CCC. Another company that has really leveraged on AI is Lemonade, based in New York. Lemonade provides paperless and personless renters and home writers insurance using chatbots and AI to create policies and handle user claims via desktop and mobile. No brick and mortar branch. Customers can choose which non-profit organizations receives underwriting profits as part of company annual give back initiative. So Lemonade has brought the concept of customer service responsibility and social responsibility to ensure that profits go back to the people who need it most. So it's brought in the concept of environment, sustainability, social and governance, ESG. And that's why it's been very, very successful, because of giving back to the community. Then another company that's done very well with AI is Zest Finance. Zest Finance is using AI in insurance. What is it doing? It's using automated machine learning tools, lets lenders more effectively gauge risk and reach potential new customers by harnessing a wealth of traditional and non-traditional data to achieve better predictions. The ultimate goal is to help companies boost underwriting profits while diminishing risk. So Zest Finance is a great example of a company that's really leveraged innovation in AI, big data, and analytics. So we can see this so much opportunity for us here in Kenya to learn from those front runners and bring in those best practices in Kenya and help our customers and help our employees and help our communities. Thank you.